Okay, guys, let's talk a bit on the movement that we have seen in dollar in the past 2 days. Let's just discuss a bit of the price action that happened today and yesterday. As we all knew, yesterday we had FOMC news release, which really did affect the market a bit, but it's the long-term outlook of that news release which caught much of my attention. So I decided to have a look on how dollar index reacted to the news release. So I don't know if any of you guys had a chance to read the FOMC press release from yesterday, but in general, what I would say is the Feds, they're trying a bit. They're trying to calm the market a bit, but I don't see that being the answer to the weakness that we are seeing right now in dollar. On a broad range, the dollar is currently the weakest currency. Even Swiss franc is quite strong at the moment. So let's look at how did that affect the dollar, and what can we take from it, and how can we make decisions based on what happened yesterday. As most of you guys have seen, yesterday started very low. There wasn't much of a liquidity in the market, but prior to the release we had a huge spike in the market. So as you can see, I'm still on my monthly chart, and we can see we have traded even further lower in our August price action on dollar index. We have formed a new low. A new low was formed yesterday at around 9200, 92.06 price point. That's crucial, because I've been lamenting all along that we're gonna see another low formed on dollar index, either in the current month, which is August, or in September. We are going to see further moves to the downside. So probably the catalyst for that move was the FOMC press release, but I'm still of the fact that we are going to see further moves to the downside in the coming weeks or 2 months. If it happens that we get a bullish close on a monthly chart, if it happens that we get a bullish close, then sentiment would have changed, you see. But since we're in an election year, I presume we should see further moves to the downside, getting into this monthly bullish order block. So now I'm gonna go on to a weekly chart so that you can see exactly what I'm talking about. So you can see on a weekly, we did dip into those sell stops. We cleared the sell stops from I think it's July, if I'm not mistaken. We have cleared the sell stops that was formed in the first week of August, and we have cleared the sell stops below, but we didn't actually dipped into our monthly order block, this last down candle here. So I'm still expecting price to dip down into the fair value gap and testing the bullish order block on a monthly chart. So now when you see on daily time frame, what we saw was market gapped to the downside yesterday. When it opened, we gapped I think let me see, roughly about 9 points that we gapped to the downside, and during the whole day it was a strong rally to the upside, but during like Asian session, London session, market was just ranging, small thin liquidity in the market. And then eventually we saw a push to the upside, a strong momentum. Prior to the FOMC release, we saw a strong push on a lower time frame. If I go to my hourly chart, you're gonna see what I'm talking about. You see this big bodied candle, it rebalanced the imbalance that was formed when price dropped to the downside, and then we had a strong move to the upside. So now what I'm trying to emphasize to you guys is we are still in a range on dollar index. We've got a range being formed on a daily time frame. So if you are to use just the bodies of the candles, you can see we've got a range that was formed. In fact, price is still playing around in that range. Yes, we have had this price action here. This is particularly of interest. This could be a huge stop hunt on a larger scale on a daily time frame, whereby we could see price returning again into this range here up to the bearish order block. So if you watched my weekly forecast for this current week, I lamented that I'll only be interested when price test the bullish order blocks in this down candle here. That can only be seen if we drop down to a H4 chart. So this candle is what I was talking about, to say I'll only be interested in the market once we reach that price action. So the moment that I saw that market broke to the downside from this level here, right, when this candle closed above, right, when this candle closed above, if you drop down to hourly chart, you can clearly see it offered great opportunities to short. It offered great opportunities to short Euro USD and to long USD JPY. You see, this move back to our pivot point on the daily time frame. Remember, this is a pivot point. That's like 50% retracement of the range that I defined on the daily time frame. So you can clearly see that market did offer a great opportunity to trade short on the Euro USD. Let me just switch back to Euro USD. There's the drop, short. You see these two big bearish candles. That was because of this move to the upside. And if I go to my H4 time frame, you can see these two, but it's in this first bullish candle that you derived your short on Euro USD back into the H4 bullish order block. And we also took a long in this price action here. We had a long position which yielded roughly about 30 pips, 30 to 40 pips if I'm not mistaken. Yeah, we got 30 pips from there. So what I'm trying to put forward to you guys is the analysis that we do, analysis that I put out mostly on a weekly time frame, the ones I upload on Sunday. Make sure you get to watch those forecast, because they will help during the week. You see, they'll help you to make an informed decision. Like for scalpers, this candle here, this up candle, would have offered good shorting opportunities on dollar index and the yen here, and long opportunities on Euro USD. You see, but that's not how I teach guys how to trade. You see this candle here, this is a H4 time frame, so this is our last up candle. So obviously we can define that as our bearish order block, and you can see what price did when it reached there. It massively dropped. And if you go to Euro USD H4, you're gonna see we had a strong push to the upside, and with Euro USD testing a bullish order block. You see, that was our down candle where you would have expected the market to trade to the upside after clearing the stops here. You see this low and this low, they were cleared, and then market turned bullish. So what I would like to suggest you guys do is make sure you understand the weekly forecast that I put out on Sunday, particularly of interest on the dollar index. Make sure you get to understand how the dollar is moving, and how is it gonna be of interest once you are making a decision on your trading ideas, so that you don't go blindly into any trades whatsoever. You have to go knowing what you're doing and how it's gonna get affected. So for now, dollar, yes, it's downward side, it's still prone to downward movement. We are going to see further moves to the downside on the dollar, and yes, we had a bit of a correction, but I think that's going to be short-lived. So now on a daily time frame, once we get into our bearish order block here, then we need to be hunting for shorts on the yen and longs on the Euro USD. So yeah, this is what I wanted us guys to discuss on Zoom, but unfortunately I couldn't get anyone to join. So yeah, I didn't manage to record offline so that you can see what I'm thinking about regarding the dollar index. So yeah, that's pretty much about it. I wish you guys good luck and happy trading. Thank you.